Talk Real Estate with Sharon McNamara, sponsored by Boston Connect Real Estate Services.
Hi, I'm Sharon McNamara, and you are listening to Talk Real Estate Roundtable. Let me share a little bit about my background before we get started. I am the broker-owner of Boston Connect Real Estate, a boutique real estate firm that is home to over 30 real estate sales and marketing consultants who service home buyers and home sellers throughout Boston, the South Shore, the South Coast, and Cape Cod. Our firm takes pride in assisting our clients in the next chapter of their lives by taking a holistic approach to their real estate endeavors. We believe that every move should be a moving experience. Every week, my real estate team member, Mary Baker, and I, along with the director of Boston Connect Real Estate, Melissa Wallace, provide you with our unique marketing approach to selling homes and share with you our expertise in navigating the home buying process. We like to mix it up sometimes, so not only will you hear our perspective on real estate topics, but you will hear the expert thoughts and opinions of some of our real estate agents at Boston Connect Real Estate and the preferred professionals that we trust. Be part of our roundtable. If you have any questions during the show, please call 781-837-4900. We'd love to talk real estate. Follow us on Facebook, Instagram, and wherever you listen to podcasts at Talk Real Estate Roundtable. If you would like a one-on-one consultation with me and my team or one of the dedicated agents at Boston Connect Real Estate to discuss your real estate needs, you can connect with us at bostonconnect.com or 781-826-8000. Now, sit back, relax, take good notes, and let's talk real estate.
And hello to all my South Shore neighbors. You are listening to Talk Real Estate Roundtable. My name is Melissa Wallace, and I am joined in studio by the one and only Sharon McNamara.
Good morning.
Good morning. I think my microphone has to be up higher, but yeah, it's a beautiful Saturday morning. Not really, but
very sticky.
Yeah, very sticky. It's humid.
Yeah.
Holly had our back porch, the door open, and it's all sticky and humid in the hallway now. So
40s and 50s from here on out, though.
Oh yeah. Well, I saw it was supposed to get 70 or 72 today.
Yeah, today.
I'm like, no, thank you. Can we just have the fall weather continuously?
We're wearing our sweaters now.
Yeah,
it just doesn't seem right.
I know.
I put my air conditioner on this morning. I'm not gonna lie. It was so
crazy.
I hate that sticky, smelly feeling inside the house. You know what I mean?
Yeah.
And then Mark opened up all the windows upstairs, and I was like, all right, so now all we're doing is making it a breezy, humid stickiness in the house. So I was like, I'm putting the AC on. I don't care. It's not winterized yet. So do you even do anything to winterize it? I don't think so.
I don't know. You're married to a plumber.
The AC.
Yeah, I don't think you do anything. Just shut it off and call it a day. Yeah, just don't put it on.
Yeah.
So, so I'm really excited about our show. He has been so gracious to sort of be on call for us because you were supposed to be on with us last week, and we just gave somebody the opportunity to join us last week because we were doing two of our agents or groups of, it was a team, and another agent was doing a veterans program for buyers. So we had a conversation about that last week, and timing was good on that. So happy Veterans Day to all of our veterans. I don't know that you call it happy though, but thank you for your service. And I know we have a lot of agents here in our office who are veterans. So thank you to all of them and their spouses, and of course Papa McNamara. Well, he was World War II vet. So, and we have a bunch of others, Chris and Sean. They were Marines and Army, so we love all of them. So thank you for your service. We appreciate you. So David Tourtillott.
Yes.
We are so happy to have you. Yes. We've had you on
Thank
before.
You for having me.
Yeah, from Homestead Mortgage. You are a regular at WATD, so I'm sure people just hear your voice now and they know. You're sort of like Madonna or something.
Oh, geez.
You're sort of like us. They hear our voices and they know. I mean, how many times have I been at an open house and there's are you on the radio? And I'm like, yes, I am.
That happened to me last weekend, actually, at my open house.
I have gotten that a few times.
Yeah.
Once you're on there for a while, that happens.
Yeah, absolutely. So we love our WATD listeners. So thank you for joining us today. We are live in studio. So if you have any questions for David, we're going to be talking about some reverse mortgage things. But he also does other types of loans. So
just reverse.
Just reverse?
Just reverse. He used to do the forward mortgages, but since about 2009, just one thing.
Oh, okay. All right.
Mortgages.
My bad. All right.
That's all right.
Well, certainly, I'm sure you could refer them to somebody, right?
Absolutely.
So my bad on that, because I thought that maybe you did just still do that type of stuff. So So we're going to be talking about reverse mortgages, but if you have any questions for us regarding that, we want to clear the air on fallacies when it comes to reverse mortgages. David, no matter how many times I've had you on my show, how many times Michael has had you on his show, why can't you get rid of the stigma?
It's tough. It's it starts from the legacy reverse mortgages from the 60s and 70s, honestly, because those ones were not federally regulated. They were around, but they were bank reverse mortgages, so the guidelines were all over the place. So at the end, there was a lot of post-death confusion with the estate. In some cases, the estate didn't even know their parents had a reverse on the home. So they didn't know what to do. And so there was foreclosures because the bank needs communication. As you know, the bank needs communication. They don't want the house, but they need communication. So if you take the 60s and 70s, all of the things that were going on back then, and you carry that forward, that's 2 decades. It wasn't until the late 80s, during the Reagan administration, that they took the concept and said, hey, we like that. Let's retool it. We'll federally regulate it. We'll federally insure it. And so they formed a committee and they built this new loan called a HECM, a home equity conversion mortgage, aka reverse mortgage. And they built it and then they released in the 90s to lending institutions. So HUD is the regulator, Housing and Urban Development. FHA is the insurer. They're the agency that has the money that pays the lender back if the loan is higher than the home's value. That means the person lived a long time. So it's really that, Sharon. It's the stigmas that pulled from the 60s and 70s. In my 17 years, I'll say this, though. Things have changed. Hopefully that wasn't a car accident.
No.
Things have changed, though, because back in 04, 05, when I got in the business, I think it was for every 12 bad articles, there was 1 good article. It's completely reversed because of the internet. So I would say it's really more that I had the same stigmas and misconceptions. They were just in my head. I didn't know why, prior to me getting in the business. So once I did my research, I just uncovered that this is just a mortgage. It happened to have been enacted through Congress into law in 1988. So that should tell people something, right? I don't think we all agree with everything our government does, either side. However, I don't believe they're going to enact a scam and have it still be in place 34 years later.
Exactly. And the thing is too, if we think about, the fallacy and like the people who are going to be doing these reverse mortgages, and before the show, I was talking to you and I was like, I am working with a lot of boomer generation right now. So the older boomer and the younger boomer generation. So they're sort of in twofold right now. And I wonder if it's just the fallacy. They had it ingrained in their head from the 60s and 70s, and they never took the time to research to know that things have changed.
That's right. But that's not to say this federally regulated reverse mortgage that I would say 98% of reverse mortgages done nationwide is the HUD reverse mortgage. There are private labels, but we won't get into that. It doesn't mean that unscrupulous humans weren't misusing the federally regulated loan. So in the 90s, it was new. And there were things going on, like, to keep it really simple, you put a reverse mortgage in place for Hazel. Her house has no liens on it. You have this, half her home is now set up as a reverse mortgage, and it's really cash. So you had people cross-selling, going back to Hazel and saying, hey, let's take some of that money out of your reverse and let's invest it. That was going on, a lot of cross-selling. And so HUD, as years go on, they caught on to that. They put new disclosure in place, new safeguards. And so here we are 34 years later. So there was bad things going on, but the loan wasn't designed as a scam. It was misused by unscrupulous humans, like any product, right? Any industry is going to have unscrupulous people.
And that's what happened to us in 2004, 2005 with just conventional mortgages, right? I mean, it was happening. So, all right, so let's back up just a little bit. I heard you say that you've been in the industry for 17 years. So tell our WATD listeners, if they're just tuning in with us, a little bit more about you and how you actually got started into this. And I want to say you're very passionate about it. You're so good at it, and it's, you know your lane type thing, and you know what you're really good at. And I would say, without even having you on this show, if anybody is to wonder and think who is the reverse mortgage expert, they would always think of you.
I hope so.
It literally says reverse mortgage expert on his
does
card.
it? Oh, does it? Oh, good.
So I'm a South Shore guy. I grew up in Pembroke.
Yep.
Grew up in North Pembroke as a kid, and live in Situate now. My wife and daughter been there 21 years. Got in the mortgage business in early 2003. Started doing traditional mortgages, Fannie, Freddie, VA, all the various loans you guys have been involved in. I did my first reverse in 05 for the same company. And at the time, I was approached by this couple in Dorchester. I didn't know enough about it, so I was inclined to say, I don't know if about those, stay away from those things. And so I said, let me just get back to you. So I did some research on it, and I couldn't find anything wrong with it, other than it's not for everybody, right?
Yep.
It's for specific people. So after that, I saw the improvement it made in that couple's life. And I said, wow, this is really an amazing product. What is going on out there in the marketplace? Why do people have all these stigmas and preconceived notions? I'm like, do I know more than the rest of the country knows about this? Like,
Do I know more than the average bear?
I would start to question myself, like, am I wrong? Am I thinking that this is like the greatest thing ever?
Yeah.
Like, why doesn't everybody see this?
So the long story short is, I don't want to drag it on. We only got an hour. Is I did that reverse, and I saw the impact it made on that couple.
Yeah.
And then I did another one. At that closing, the woman was crying. I didn't know why she was crying. I thought maybe something was going on personally, a death or something.
Yeah.
And I said, is everything all right? And she goes, I'm just so happy that it's going to keep me in my house, and I'm out from under this financial pressure.
Yeah.
I grew up in this house, and I drove away from that close. And I said, what is going on here?
Yeah.
Everybody thinks this thing is bad. And here I am witnessing, in forward mortgages, it's a commodity, right? So I do a loan for you. I do a good job. It gets closed smoothly.
Yeah.
But you're going to check around with others when you get another mortgage.
Yeah.
You're always going to come back. So this is different. It's more of a niche. It's more consultative. So I love this 62-plus demographic because I just was raised as someone who always was taught, just always do the right thing for people. So it just fit well for me. And so the long story short is I kind of slowly got away from forward mortgage lending and got more into reverses. And since about 2009, I think that was the last forward mortgage I did.
Wow.
And I just do this.
Have you seen sort of like a correlation of how many people are doing reverse mortgages when there's like not a lot of inventory? So like say they might want to stay in their home, but maybe the number one reason why they want to stay in their home is because they don't know where they would go. And right now we have very limited inventory.
Yeah.
So I would think that, anybody who has been in their home for a while and has that equity and sort of is worried about not knowing where they're going to go, would this be something that they should consider?
Yeah. I mean, the good news with a reverse mortgage is you can use one to stay in your home. You can also use one to sell the home you're in, figure out your net proceeds, and have Sharon help you find another house to live in.
Yeah.
And we take a mortgage out on that. It's a reverse mortgage. And your down payment money comes from the house you just sold. So you can use a reverse to stay and refinance.
Yeah.
Or go and purchase your next home.
Yeah.
So it can be used for a purchase transaction or refinance. So yes, the answer to your question is, but they don't know that. So when I sit down with them, I say, are you open to moving? Because if I'm sitting down with a woman who just lost her husband and I see this 4-bedroom colonial with a 3/4 acre lot, I'd always have to say, you open to selling? It seems like an awful lot for you to manage.
And it is. It's a lot to manage.
Right.
I think that's, and you know what? It's, people who can't do it on their own, and now they're, if they do the reverse mortgage, it's almost sad to think that they're paying for someone to do the lawn and to do all that maintenance and stuff. It's almost like they're giving that money away where they could sell it, get into something smaller. We call it right sizing around here. The right size for you right now. That's a really good option, and that option is different because I know I've heard of people in the past saying that they were going to get a home equity loan and use that money to then purchase something. So this is different.
Yeah, it's different. You just think of it like when you're working with someone who's using a mortgage as part of the house they're buying through you, it's the same thing. It's just they might be, if they're selling a house and it's a contingency, just using a forward mortgage example. So you got a client looking to sell and they're looking to buy another one through you. They have a contingency to sell though, right? So the same would hold true here. In most cases, a retiree is going to need the money from the house they're selling to put down. It's going to be roughly half on the next house, and that other half's going to come from a reverse mortgage. So it's about a 50% down payment, 50% reverse mortgage.
So I'm just looking at as like from the seller's perspective. So say you get an offer on your home and that buyer is doing a reverse mortgage to purchase your home. Do you have to, would that be in their like pre-approval, or like how does that, because I would think that there might be a little stigma there as well.
Yeah.
Correct?
Unfortunately, there is a stigma there, but if someone's pre-qualified for a Fannie loan, a Freddie, a VA, or an FHA, there is the stigma, though. You're right, because people say they're using a reverse mortgage to buy a house. Forget that offer, Sharon.
Well, that's why it's
going to blow up.
That's why it's so important for us to be educated on these loans, because we're the ones who are relaying the information to our sellers or our clients. So we talked about this last week, and I don't mean to interrupt you because I did ask you a question,
no,
but
that's okay.
And we talked about this last week with VA loans. There sometimes is a stigma around there, but if we just educate our clients about, no, these are great loans, like if they wouldn't be qualified for it if
I have to pre-qualify them. So if someone's going to qualify for reverse mortgage, then they're qualified. They're going to get the money, unless something goes sideways health-wise during the process. But yes, for a lister looking at several offers, and it depends on the market, because we just came out of a market that they might say, nah, I'll take the cash offer. But if things go back to a balanced market and there are contingencies accepted, it's just a mortgage. So it doesn't matter if it's Fannie, Freddie, VA, FHA. They've been pre-qualified for a mortgage. It doesn't matter what the label is.
Yeah.
As far as the lister's concerned, it's going to have no effect. They're pre-qualified for it. So it's their money they're borrowing to buy your house.
Yeah, the seller shouldn't have to worry.
Yeah,
they have they shouldn't really care where the money's coming from. It's coming.
Right, and someone's pre-qualified them, whether it's putting 80% down or 3% down. It's a mortgage. They're just getting more money from a bank, but they're pre-qualified to do that. So that letter should reflect that. So it shouldn't have any effect on
how the seller feels. Yeah.
Now, I get it. Again, going back to what the market is now, if I was a lister, I'd be taking cash offers too. It's just the path of least resistance in most cases. But
and we're not seeing so much on that. There isn't. I mean, there is a lot of cash that's still out there, but it's certain properties that we're sort of seeing that on. But I think we actually said this last week as well. Is the harder part is educating the listing agents and making the listing agents aware of what these programs are and how they work, so they're not the ones that are saying, just writing it off like, hey, if I were you, I wouldn't bother doing this one or that one, Yeah.
I think in years to come, you're going to see, because my age, we're not going to be afraid of reverse mortgages. I'm 55. It's just not afraid of it. I think in years to come, it's going to become more mainstream, where listers are going to be more familiar with reverse mortgages. It's just been in the market now for 34 years, and 10 years from now it'll be 44 years. So I think as people become more familiar and they know someone who has one, most people know someone who has a reverse mortgage now. In most cases, they're like, yeah, my aunt has one. She said it's the best she's ever done.
Yeah.
So there's less negative information out there about reverses now than there was when I got in the business. I had to spend the first half hour in my in-home consults with the family just with objections. What about this? I've heard this.
And I bet rejection from the family as well. Like, what are you what are you doing to my parents?
Yeah, the kids.
Well, why are you giving away my inheritance?
Right.
Really? You're reading between the lines.
Right. And if you really boil this down, this is the way I'll frame this simply. So a reverse mortgage is just a home loan bundled in with every other home loan. You take it out the same way. You take it out through a lender, you sign a loan application, there's an appraisal done, and then there's a closing. So that process is the same. So what's the biggest difference between this one and all other mortgages? Well, the word reverse is key, because a reverse mortgage is the same, except it's unlocking. The mortgage itself is a tool that unlocks about half of the home's appraised value and serves as a tool to make that loan payable to you in the form of payments. So it's reversed.
Right.
The mortgage I have is forward, right? I pay Chase $2,300 a month every month, the first of the month without exception, forward. So the word reverse comes into play there. So it's a mortgage that's set up, and you've just unlocked and hedged half of your home's value on average that you can take out in lump sums, monthly payments, leave it alone, never use it, just have it there as a buffer asset against your portfolio. I mean, there's so many different applications with this. That's just why I'm so passionate about it. Affluent, non-affluent, needs-based, doesn't matter. There's an application if you're 62 and older and want to stay in your house long term.
And you can do this if you wanted to make modifications to your home that, like, you could age in place. So, correct? Like, so you could take out this money if you do the reverse mortgage and make improvements on your home?
Absolutely. It's your money, right? So a home is your home. So the mortgage doesn't restrict the asset that's yours. It just opens up and unlocks roughly half the home's appraised value. And you can use that to pay off regular mortgages, which is done as a refinance. You can use it to make modifications to the home, to age in place, widen the hallways, put handlebars in the bathrooms, things like that. You can use it to set up and use it to finance in-home care instead of your parents going into a nursing home. You can use it just to make general repairs to the house that might come up down the road. You can use it. Affluent people can use it just to have. It would be all set up as a line of credit, like a home equity line of credit, and use it in times when stock markets are down and they draw from their portfolio in the form of a payment as part of their spending plan. When their stock market portfolio is down, if they have this line of credit in place, they stop drawing from the portfolio and not selling at a loss and going right to their line of credit. So having the buffer asset in place preserves the portfolio.
Right.
And the list goes on. I could go probably to 100.
I know you could.
100, probably go up to 100 applications. That's why it's not just a mortgage. It's a tool. It really simply is a tool.
And I have a bunch of questions, and I'm sure our WATD listeners do too. So if you have any questions for David, again, we have David Tourtillott here from Homestead Mortgage. He is a reverse mortgage expert. We are lucky to have him here. He's on my sort of speed dial anyways when these questions come up, and I sort of tell people, you know, you're my guy anyways. But if you have any questions, 781-837-4900. We are live in studio today at our home studio here at Boston Connect Real Estate, who is the sponsor of our show, along with McNamara Broker Team. Mary is working, so she's out doing open houses today, but wasn't able to join us. The question I have is, I mean, we have only 4 minutes until the break, but we can always take it up. Can you dumb it down for me? Okay, I'm not saying that it's for our WATD listeners. I'm just going to give a scenario. I am a homeowner. I'm 62 plus. Do both parties have to be 62 plus?
They don't.
Okay. So I'm just going to take it easy from there, and then you can get into details. So now I'm in my home. It's the value of my home, just to use round numbers, is $500,000. Okay, that's the market value of it. Okay, the appraised value, whatever you want to say. I currently don't owe anything on the house. These are just examples. This isn't my real life because I'm only 54. So you don't owe anything on your house. I'm eligible to get $250,000.
Yeah, today about 240. So for 40% for a 62-year-old. You said 600, right?
Well, I said 500, but if you want to use 600.
You're right. You're right. I thought it was 600. So
okay, yep. Okay, so if it's 500.
Be 200.
Okay.
40% of.
So 40%, so you can get 200.
Get 200, so, yep.
So that 200, I do the reverse mortgage. So now basically all it's saying is, like, I personally could say, okay, I owe $100,000 on my house right now. I went the traditional path, and that's what I owe. So basically that homeowner is just saying the same thing, right? I owe $200,000 on my house.
They don't owe it because they don't have any mortgages or liens on the property that the reverse is paying off. So it would be all set up as a line of credit.
Okay. So they have that money put aside as a line of credit.
In the house.
And they can just draw as much as they want off of that, any amount of lump sum at any point.
Yep. There's a restriction in the first 12 months, but with your scenario, it's at any time you can draw the money for lump sums.
So you could draw the money and you could go on vacation.
Yep.
Okay. You could draw the money and buy another home.
Yep. You could draw, if you could buy a house for the 200, say a condo in South Carolina.
Yeah.
Now you have a second home down there with no mortgage payment, and you got the 200,000 reverse up here on the primary with no mortgage payment. What if you took the money out?
So what if you used some of that $200,000 for a down payment on another house? Are you eligible to get another loan? Like, does that ever, like when people are looking, like if you, at 62, you're still young.
Yeah.
Right? So now I have this $200,000 line of credit. When I go, if I went and took, say, $50,000 of that, went to buy another place, well, now it would be the Carolinas because it's certainly not Fort Myers, right?
Right.
But you have to look on Realtor.com and see what they're selling, these houses that are destroyed. Anyways, that's another story.
Yeah.
So if I put $50,000 on another house in South Carolina, let's say a condo, like you said, and then I end up with a mortgage of $150,000 there. I'm still able to do mortgage. I'm still able to be like financially able to make decisions.
Yeah, you can only have one reverse mortgage at a time, though. But they could take out a regular mortgage. They could use 50 from the 200 in your example, take 150 out in the form of a bank loan or something. Mortgage.
A conventional.
It just, nothing could ever go behind the mortgage on their primary. So you can't take another one out on your primary home, like a regular home equity line. Nothing can go behind the reverse mortgage, but you certainly
and somebody will see that. Like, so if somebody was like, all right, now I have my reverse mortgage for $200,000 and I'm going to try to get a home equity loan.
That'll be seen on the credit report.
It will be seen.
There's no mortgage payment, though. So payment doesn't show up on the credit report. It just shows up as a number.
Okay.
So there's nothing to be debted for as far as a payment's concerned.
Okay. So as I'm drawing this money and I'm using it, so again, what I'm seeing in like my niche at this point is working with the younger and older boomer generation. And I have been telling people in a lot of circumstances, you're better off just staying where you are, because you can't make a lateral move. And unfortunately, I would say the older boomer generation, like they're just so confused at what our market is doing. I mean, they must be. They paid, $15,000 for their house, right? So they saw what was going on, and I don't know that they fully understand, but then they have this conception of, all right, I'm going to sell my 4-bedroom colonial and I'm just going to buy a small ranch. Well, those small ranches don't exist.
They don't exist anymore.
Everybody wants the small ranch, right?
Everybody
one
wants
level
it.
living. Right.
Everybody wants that.
We used to say it years ago, but now it's like, no, there's 95 people that have let you know if one comes up, call me. I'm sure, right?
Absolutely. I mean, that's what, and we were talking about this in the office recently. There's actually 2 demographics that want that property. So it's, I'm going to right size down into something smaller, or this is my first time home.
Yeah.
So and we just don't have them. They're not available. And I think that the builders, I'd like to give them credit because it's very expensive to do anything. I'm on the Affordable Housing Committee for Pembroke, and we have this discussion all the time. And some of the people who aren't familiar with, I would say, like construction, don't understand, well, why don't the builders just build a small little ranch? That's what everybody wants. Because you can't afford to.
Right. They can't afford. They won't make enough profit on that.
Yeah, if any, because the land, the roads, the engineering, the permitting, the whole process is just too much to do. And P.S., a ranch potentially costs more to build than a colonial or a cape because you're spreading it out. So you have more foundation, more roof, that type of stuff. So
you can use a reverse, and great point there. So you meet with someone who has a 4-bedroom colonial and their bedroom's upstairs. So you can set up the reverse and use the money to have a contractor come in and make one of the rooms downstairs the bedroom.
I've given that suggestion.
So you've got the resources because you set it up. There's no debt when you use a reverse mortgage, no payment. So you pay the loan back at the end. The end can be when you sell the house if you take a reverse out or you pass away. So the interest on what you borrowed gets paid back at the end. The end is when you don't live there anymore. There's never a payment obligation while you're living there. It's just a way to tap into that house, get cash out, but not have to sell it. It's like selling half your house, but you still get to live there.
It's like selling half your house.
They don't say you can only use half the kitchen and half the bathroom.
Yeah.
You can use the whole house, but you have access to cash in that asset. It's an asset. We all use our homes as a part of our net worth, right?
And I can understand why people are confused about it, because honest to God, David, I mean, I'm pretty.
It's not easy.
I'm pretty smart. Like, and
You've been on several times, and I think the last time you were on, we were both. It was like light on marble or something. Like
light on marble.
We were like, oh yeah, now we get it. And now I'm like, wait, can I go back? I should have listened to that show before so I could prepare. I'm like, no, I know what a reverse mortgage is.
You know why? Because it's the only loan that is different from every other loan.
Yeah.
So we're so used to a mortgage with a payment, with escrows. You take a down payment, you take out a mortgage, you pay it down for the rest of your life, and then you have all this equity in your house. That's where reverse comes in. It's like deposits in hundreds of thousands of dollars for years. The government just said, hey, let's give them a way to tap into that asset as if it were one of their IRAs, Roth IRAs. They're just spending from their house instead of spending from their portfolio. The net worth goes down either way you spend. Whether you're spending from your house or your portfolio.
And it sounds better to me than getting a line of credit, because with the line of credit, as you're using that money, you have to be paying that back at the same time, right?
Exactly.
Once you
and that's
tap
on a
into
variable
it.
rate, so are these. But the biggest difference between this and a home equity line, a lot of people say, hey, David, what's the difference? Home equity lines of credit are very cheap to put in place, and there's a reason why. They can be canceled, suspended, or frozen if we're in a down real estate market.
Yep.
Every closing home equity line says we have the right to suspend the use of this line of credit if markets go down. Reverse mortgages, they're federally insured. Your home could go down $300,000 in value, and you can call them and get the whole line of credit.
So right now would be a very good time to do it, as we're seeing the prices of homes go down.
Right. It's the way I look at this, when I keep it really simple, when I'm talking to financial planners or anybody, it's a hedge against a little section of your home's value that's protected because you've put it up. Once it's set up, it doesn't matter what goes on in the world. They can never suspend or freeze that line. And this is the secret sauce. This will make our heads go really.
Oh, boy. Hold on now.
The line of credit amount grows income tax-free. So the amount of money in your line of credit increases every month. Right now, it's about 7.3% income tax-free.
All right, so that $200,000 in my scenario.
Times 7%.
Times 7%.
Next year, it's $215,000.
Okay.
And why is it doing that? Because they know, the actuaries at HUD know that homes appreciate over time. And they know that the person who's taking it out now at 62 is going to be, how old next year? 63.
Yeah.
Then 64. The older you are when you take one out, the more you can borrow right out of the gate. So since you've taken it out now at 62 and you're going to be 63 and 64 and so on and so on, they allow more credit to add to the credit line, guaranteed. And if you never use it and retirement goes great, you might have a line of credit that grew from 200 to 500 by the time 20 years goes by. And if you never use it, you don't owe it, but it was there.
So, and then when you do pass and your children are selling the house, then they just have to pay that off.
They pay off what they borrowed, really, from the mortgage.
Yeah.
So if you
because if they didn't use the 200,
exactly. Let's say they never used it, and the line of credit's 500,000, but there's closing costs, so those were rolled in.
Yeah.
So let's say the loan balance is $100,000.
Yeah.
You know, they use some money to fix the roof, buy a car. And then the kids inherit it after they pass away. They sell it for $700 minus the $100. The kids walk away with $600. So it's the line of credit's just available and earmarked for the borrowers while they're living there, and they allow it to grow. It's like a credit card limit.
Yep.
Just imagine a credit card limit always going up.
Oh yeah.
And if you never use it, you don't have a limit.
Yeah.
Credit cards have payments.
Yeah.
Reverse mortgages don't. So.
Okay. Well, we went a little bit past our 11:30, but I definitely want to take the time to take a little break so we can have a little sip of water here. And again, if you have any questions for us, you can ask us a question about real estate. That's what we do. Or you can ask David. Again, we have David Tourtillott from Homestead Mortgage with us. He is a reverse mortgage expert. And when I say expert like that, I'm not even putting that out there mildly. He really is an expert at all this. And as many times as I've had him on, I still have more and more questions. But call us. Tim is in studio today. I don't even know that I said hello to Tim. So.
Hi. Yes, I'm here. Yep, ready to take those phone calls. Call them in. Yep.
Perfect. My buddy Tim there in studio in Marshfield, 781-837-4900. We will be right back. Let's face it, we all get to the point in our lives when our current home no longer suits our everyday needs. With ever-changing living dynamics, addressing your future is all about right-sizing. You know, finding the right size home for you right now. Is your current living space too small? Are you looking for more room to grow? Do you find yourself making continuous home improvements to fit your current lifestyle needs? Let us help you find the right size for you right now. If you would like a one-on-one consultation with me and my team or one of the dedicated agents at Boston Connect Real Estate to discuss your real estate needs, you can connect with us at bostonconnect.com or 781-826-8000.
I'm David Tourtillott, a local certified reverse mortgage professional. There are less than 200 certified reverse mortgage professionals nationwide, and I live right here in Scituate. Have you ever considered a reverse mortgage in the past but just didn't know where to begin? You're not alone. Over the past 15 years, I've helped hundreds of retirees with the same concern. When I meet retirees, I hear things like,
"Yeah, I see the ads on TV. There's enough of them. But it seems too good to be true, really. And plus, confusing, really."
Well, I can help. This is where trust, integrity, and credibility come into play. I treat all my clients the same way I would treat my own mother and father. And I have reference letters to back this up. So give me a call. I'll ask you a few questions, and we'll go from there. No obligation, just education. I promise.
Call 617-797-3277 or homesteadreversemortgages.com. NMLS number 46902. Mass broker number 153492. Equal housing opportunity. We now return to Talk Real Estate, sponsored by Boston Connect Real Estate Services on 95.9 WATD.
And we're back. Hello to all my South Shore neighbors. I am Sharon McNamara. You are, of course, listening to Talk Real Estate Roundtable here on WATD, the one and only South Shore best. We have Tim, who is in studio with us. He is our producer on Saturdays, and we adore him. Hello, Tim.
Hello. Thank you. That's very kind.
Yeah, it's so true too. Like I don't have to I can say BS, right? I don't have to BS you.
That's right. Yes, you can say that. Thank you for not saying it. Yeah.
Just don't tell us what the acronym stands for.
Yeah, we're good. We know the first half is bull. We'll leave it there. Yeah.
Exactly.
Yes.
But Tim is waiting for calls, 781-837-4900. We are in studio again with Melissa Wallace. She is our Director of Operations here at Boston Connect Real Estate. She is our everything for sure, and she is here with us today.
I am.
Oh, I want to talk about that?
I just want to interrupt our little reverse mortgage conversation for a second because we are hosting a holiday open house with pictures with Santa here at the office. It is going to be 2 Saturdays from now, so it is the Saturday after Thanksgiving, the 26th, from 10:30 to 2:30 here at our office, 19 Mattakesett Street in Pembroke Center. Again, we're Boston Connect Real Estate. We have Santa himself coming from the North Pole, and we have a professional photographer. So this is a free event for all of our clients, everybody in the community. It is dog friendly as well because we are dog friendly here. So bring everybody that you love and come on down. And we have tons of things to do. We have a story time. We have letters to Santa. Again, we have the pictures with Santa. We have a little blue truck here. So Millie,
you're gonna have that awesome truck.
Yeah, Millie
awesome.
Mark's 1936 Ford pickup truck is going to be here again.
All decorated,
and, we hosted it for the first time last year, and it was amazing. We had a ton of people here, and then all through the holiday season, we had people coming down from all over to take pictures with Millie and stuff. So we are doing that event again. Again, it is free, so please come on down.
We'd love for you to pre-register so we can sort of plan accordingly.
Yep. So if you go to Boston Connect Real Estate on
BostonConnect.com. Oh, sorry.
You were interrupting me.
Sorry.
Boston Connect Real Estate on Facebook. We have a Facebook event there, so you can get all of the up-to-date information about our event because we're posting things all the time on there. And then if you go to BostonConnect.com and under events, you can see you can register for it. So that's just to sort of get an idea of how many people we have coming. It's definitely going to be a lot more than last year. So please come and wait for Santa.
Enjoy.
We have tons of things.
I know that Emmy Flaherty, she's one of our full-time real estate agents here at Boston Connect Real Estate. She was looking into a hot chocolate and donut truck or something. So we're trying to
she's
get
looking
that.
into that. But we have, a lot of our agents are going to be here. So they've invited their clients. I know Team Flynn, I'm talking with them right now, that, they just invited a ton of their clients. So it's going to be a great event. And if it goes longer, it goes longer. But Santa will be here from 10:30 to 2:30.
No, 11. Santa gets here at 11.
Oh, well, yeah, but you would like to get in line.
Yes.
Good point.
We're going to be we're going to be doing that in groups. We've already thought that out too. So make sure you come. That's why we're asking people to pre-register. We'll have a place where you can check in when you get here. So while we don't want people waiting in line for 2 hours, you can be doing all the other events that we'll have going on, which is great. But one of the things we're saying to people, this isn't just for, the young kids. It's such a good opportunity when we have the professional photographer here who's volunteering her time. Actually, Tracy Marino, who's she has her own photography company. You should look her up. She's wonderful. She does high school things and weddings and all kinds of great stuff, family portraits. But it's a great time to be doing generational pictures, and you'll be thankful that you have them for years to come. And talking about generational, again, we have David Tourtillott here with us this morning from Homestead Mortgage, and he is a reverse mortgage expert. We are talking about reverse mortgages. We are getting rid of the stigma. It's a great thing to do. And
it's a great thing to learn about. I would say to people, anyone 62 or older, learn about it. Because and 62 and older and want to stay in your home long term.
Yeah.
Learn about it. If you don't want to stay in your house long term, a reverse mortgage is not a good strategy at all. Wait until you're in the house you want to stay in long term. Couple quick stats.
Yes.
I was going to ask you.
Okay, you can ask.
You guys are in the real estate market,
Yeah.
so I want you to try and guess this number. Homes nationwide owned just by people 62 and older. How much unused equity do you think combined, just 62 and older nationwide, all primary homes, not investments or second homes, how much unused equity in a dollar amount, just throw out any number, do you think is
For each home?
No, combined.
Oh, combined. Oh, geez, that has to be a huge number, right?
It is, yeah, just throw out.
Is it in the millions?
No.
Is it
in the billions?
in the trillions?
Yes.
It's in the trillions?
In the trillion.
Oh my God, I was going to go lower, like 600,000.
No, I can imagine though, because
I'm going to go with,
go ahead.
Go ahead. See if you can guess it.
I'm going to
Don't
go
look.
with like 13 trillion.
Close. $11.58 trillion of unused equity accumulated and sitting idle just in people 62 and older. That's no one below that age. So it's an asset class that's not being considered. And it's an asset class not being considered really by the financial planning community. Because a lot of times people have money that they've accumulated. They go to a financial advisor and they also say, hey, by the way, I have a house that's worth $800, no mortgages on it. And they just say, well, let's not even talk about that. It's good that that has no mortgages on it. And that is good. I'm not saying that's bad. But we're not considering $11.58 trillion. That's a massive asset class that people who are 62 and older that want to stay in the house long term, they could tap into that now and just set it up as a line of credit and help combat inflation. Because right now I'm getting calls all the time. I'm on fixed income, David, and inflation's just eating away. And I'm having to draw more money from my portfolio. And I say, well, do you have any mortgages? Yes, I have a small mortgage too. And so that can hurt their income too. This is a tool where you can set up a reverse against your house and make up the payment you're losing due to inflation by drawing the money out of the house. So it's just another tool among many other tools to help combat inflation. People who have mortgages still in retirement, and it's about 42%.
Wow.
Still carry mortgages over age 62. This is a great way to refinance any mortgages they still have into a reverse, right? Because when you take a mortgage with a payment, put it into a mortgage without a payment, what does that do?
Savings.
They don't have a payment anymore. They don't have a principal and interest payment. So if you have a $1,500 a month principal and interest payment, and inflation's eating away your income and you want to stay in your house long term, this is a way to transfer that mortgage and relieve yourself of $1,500 a month net cash flow.
Yeah.
I can go on, but
and I'm
we only
sure
have half an hour.
I'm sure that you're hearing that a lot though, because I mean I understand that there are a lot of seniors out there that are on fixed income and everything is going up. I mean, I was watching the news this morning and the food at the grocery store somehow or another is oddly more expensive than if you're going out to a restaurant, right? But again, I mean, it's just everything: gas, food, health insurance, like just anything and everything is so expensive right now.
And all I'm saying is have a conversation about this. I don't sell this loan as a certified reverse mortgage professional. There's less than 200 CRMPs in the entire country. It's hard to get. That's why there's less than 200. We don't sell it. We have a conversation about it. We talk about the pros, the cons, what you should look out for, when you shouldn't do it. So if you're 62 and older, all I can really stress today is just learn about it. There's no cost to call me and have you say, hey, Dave, just fill me in on what this thing is. And I do that. That's 95% of what I do is educate. The other 5% is when people say, I'm ready to move forward, let's get the process going. So,
with that money that is sitting in your little account, right? That the $200,000 when we were talking about my scenario, if it was my scenario. So what happens if now the senior who was living in the house, let's just say they're older now, and now they have to go into assisted living? What happens then?
Yeah.
How are they looking at that money?
Yeah, so the money's just equity in the house that was never used. It was just earmarked for them. If they go into a nursing facility and are never coming back home, the loan will become due once they're gone for 12 months.
Okay.
If they break their hip and they're going in for rehab for a couple of months and coming back, nothing happens to the loan. But these loans are due when anyone who borrowed the money, that could be a married couple or one person, once they no longer live in the property, the loan is due. So that could be because of death. That could be because they've sold the house after they took the reverse out. That could be because of Sharon's example. They're still alive, but they can't be cared for in the house anymore. So they had to go to a facility. But this reverse mortgage is used frequently with my clients to keep them in the house. In some cases, 24/7 care in the house.
That's what I was just going to ask. That is a great idea.
Yeah. They use the money there because no payment, right? They use the equity from the house. And usually I'm dealing with the kids at that point because if it's 24/7 care, it's usually dementia or something like that. But the kids, when their parents were alive, their parents would say, if you can please just keep me in the house as long as you can.
Yeah.
And the kids are granting their parents their wishes by spending the equity. Now, they can't spend it all because you can only access about 40 or 50%. So if they spend all of that, now they're on to Plan B.
Yeah.
So...
But it would give the person time.
Gives them time.
Gives them time. And if it is a dementia thing, you get to a certain point where you probably can't have somebody, just staying in the house anyways, right? So I think that's a great idea. Did you have something that I interrupted you for?
No, I was just laughing, not because you were talking about going to the grocery store. I made a meatloaf last week for myself, Mary, and Sam, and I spent $44 on the ingredients. Yeah. And then it took so long to cook. We didn't eat until 10 o'clock that night. I'm like, I would have rather gone out to dinner.
Yeah. Imagine that, $44 for a meatloaf.
And $40 to fill the tank to go get
And I already had the sides at home. It's like, what was it that I put in that meatloaf?
Yeah, I know it is. It's really expensive. And, and I'm thinking about the seniors, and I still have a flashback to even last Thanksgiving. I was over at Stop and Shop. It was a couple days before Thanksgiving, and an older gentleman came up to me, and he was like, I was going to buy myself a roast, but I'd have to put it on layaway to afford it. And it broke my heart. I was like, would you like me to buy you a roast? And he's like, no, dear, I'm fine. But, I mean, it just breaks my heart. I can only imagine where he is today, I know. And a lot of times, too, David, are you seeing that the seniors who are in their home, they don't want to be a burden to their children. So do you think their children probably don't even fully understand either?
Yeah, in some cases. I'd say about 75% of the phone calls I get, and oftentimes they're from the children. Yeah. Hi, I'm Stacy doing research for my mother on this. I think this is probably the way we want to go, but she doesn't know much about it. So the other is the client calling me, the prospect. I don't have any family. I don't know anything about this, and I'm not really good with math. And so I meet with that person. So, it's about 75-25, and it's sad, right? Because they don't really have anywhere to turn. They don't have any family, sometimes don't have any friends that are, maybe their friends have passed away. So I see everything. I see affluent. I have affluent clients. I have middle-class clients, needs-based clients, meaning they have nothing left, just the wealth in their house. So it stretches across so many different demographics, or so many different levels of income, I guess, in the same demographic, 62 and older.
Okay. So in 8 minutes, tell us the process. Step one.
Step one is sit down. It doesn't have to be me.
But it should be.
Yeah, you can.
I'll say it.
Google local CRMP and certified reverse mortgage professional. That's a registered trademark designation. It's the gold standard in our industry. So reach out to someone local and who's certified. After you do that, you can either do a Zoom, a phone consultation, or meet in person. Typically, they want to meet in person because that generation wants to trust you, wants to know. And I like that, too, because they get more out of it with visuals. And so step two is after we leave each other, I always leave behind some information, the numbers, the closing costs. If they decide to move forward, they have to complete a counseling class over the phone. Why is that? Well, it's a one-on-one class. HUD put it in place. If someone decides to do this, we know the age group. We know they're vulnerable. So they want to make sure if people are going out to this demographic's home, selling them on this loan instead of educating them. They can't move forward that day. They have to complete the class. That's a neutral person they speak to.
That's my question.
Certified by HUD and approved by HUD. So they go through this script, right? So that person gets to learn about this reverse mortgage from someone who's neutral. Doesn't care if they do it. That's step two. That's the first mandatory step. Step three is what you know. You sign an application. We do that. I go back out to the house. I get some documents from them. Step four, we have an appraisal come out, FHA certified appraiser.
So let's talk about that.
Yeah.
I want to discuss that. So go ahead.
Okay.
You finish your thought.
So we all know FHA has minimum house, because I'm not an appraiser.
Yeah.
But you and I both know what they're going to find. So we could tip that person off and say, hey, do you have the resources to paint the back of this house? It's really bad. The front's not so bad, and we can do a repair set aside for that, but the back is going to need to be addressed. So it's got to meet FHA standards. After that, once we get the appraisal in, then the loan goes to a lender. And the underwriting process begins just like any mortgage. They approve it with conditions, you clear the conditions, and then it closes.
What was that, step 5? What was that again?
It goes into underwriting.
Underwriting,
So
okay.
we submit the appraisal, the application, signed application, and the borrower's documentation.
Yep.
In my world, we can't do piecemeal. We have to send everything at once.
All at once.
So everything stays idle until we get the title work from the attorney, the appraisal, the application, and the borrower's documentation. Goes to the lender. It's cookie cut. They underwrite in 72 hours. And then the loan closes after that. Today, because it's, the appraisers aren't as busy.
Yeah.
From application to closing, we, on average, it's about 30 to 45 days from application to closing.
Okay.
It used to be 60-ish days, because when the appraisers were busy, they were 4 or 5 weeks out.
Okay. And back to the FHA part of it is, one of the things that I'm running into, that I'm seeing with that demographic and that age group, they also had the mentality of the Depression, where if it wasn't broken, they weren't fixing it.
Yeah.
Right?
Yeah.
Or if they were fixing it with masking tape.
Right.
Right? Or staples. And the other thing that's so important, and I want to sort of address from my point of view, and when we're in, you've, sent me and given my name to several people, and I appreciate that, is when I go out there and I'm looking about like getting this house on the market, and I'm thinking about that FHA appraisal that you're going to have to do, I think it's so important for the children who are adults at that point. I mean, if your, parents are in their 80s, you're probably in your 50s, right? You should be taking notes of when everything was being done in the house and really looking after it. And I'll tell you a situation that I had with one of our listings recently. Older woman living in the house. She was in her 90s. I currently am working with the family. It's an estate sale. Wonderful, wonderful family. Very close to their mother and taking care of her and doing everything. She aged in place, and she, was able to stay in that home until she no longer was able to, live.
Yeah.
But they had like a basement system put in, and there was a pipe that goes, the sump pump, and it goes and leaches out. They were told that every year somebody was coming and cleaning this out. Well, when I went there and I was looking at things, I was like, okay, the sump pump is going off every 2 minutes or something. And I noticed it was bubbling out of the vents.
Oh.
So being married to a plumber, my first thought was it's not getting very far where it's already bubbling out of the house, because it's coming out of the house and the vents were right there. And all it was doing was regurgitating the same exact water, and it was going in, bump, and it was only a matter of time that thing burned out. So I talked to the family, and they said, oh, well, we had a company that was just out there a year ago. They charged my mother $375 a year, and they come out and they, make sure that all the lines are clean and everything's all set. We'll give them a call. She gave them a call. They couldn't get out there for another week. I said, I wouldn't take the chance, because once that pump stops, you're going to end up with water, right? So Mark went out there. David, you would not believe what he pulled out of that pipe. I will show you pictures.
Wow.
It is horrific that people will take advantage of seniors. So Mark went in. He had to clean out that drain 3 times, and what he pulled out did not occur in the last 3 weeks.
Wow.
It was years and years and years of branches and trees and leaves and everything else that was stuck in there. So what I'm saying is, if this is your parent that is in that situation, be sure that you are following up. You should be the point of contact that is helping with all this maintenance stuff. When I told the family what happened, they were horrified, because they thought that this person, that they were doing the right thing by having this. Okay, every year we know that's going to be looked at. But I'm asking them questions, and we only have 2 minutes. I can't believe it. But we're asking them questions like, how old is the roof? What is this pipe? What does this go to? And they don't have any of the answers. So definitely know all that. But definitely, I think that this is such a great tool, because if your parents haven't been making those updates, they have the opportunity to do this reverse mortgage and do the updates and the maintenance that is needed to sell the house and get you the most amount of money when the time comes.
Right.
Right.
And like I said, it's anyone 62 and older that wants to stay in their home long term. You don't have to. I'm just saying the intent.
Yep.
That's someone who should learn about reverse mortgages. And I will just give Dr. Wade Fowle a quick plug. There's a book. Just go to Amazon. Dr. Wade Fowle. Last name is spelled P-F-A-U. The title of the book is Reverse Mortgages. He's an outsider. He wrote the book. It's 130 pages in March and released it. So that's someone who's neutral. You know, don't have to listen to me.
And he's a chief economist. So, I mean, and you
doctorate from Princeton.
And we were talking about that after. All right, David, you have a bunch of points on there. So we're going to call this step 1 of reverse mortgage. And I'm going to have you come back in a couple weeks.
Absolutely.
Can you do that?
Absolutely.
All right.
Whenever
So
you want.
We're going to have David come back in a couple weeks and we'll finish off the topic. How can people get in touch with you?
617-797-3277.
One more
Facebook, 617-797-3277 or homesteadreversemortgages.com.
All right, perfect. And if you didn't get any of that, you can reach out to us. Melissa can let you know how to get us at
BostonConnect.com.
All right, we'll see you, everybody. We'll be live on Tuesday, so we'll see you then. Bye, Tim.
Bye.
Have a great weekend.
Bye-bye.
WATD FM Marshfield, WBMS Brockton.